Well, hello, everyone. Cynthia Tomane with Interactive Brokers, and thank you for joining us for today's sponsored webinar with GreenTraderTax. Robert Green, CPA and CEO of GreenTraderTax.com, is going to be presenting today on tax treatment for volatility products, including options, futures, ETFs, and ETNs. So, Robert, thank you so much for joining us. I know you've put a lot of effort into today's presentation. Let me go ahead and pass you the controls so that you can share your desktop, and let's get moving here this morning.
Thank you, Cynthia.
And thanks for joining us, Robert.
Great. Welcome, everyone. Let me just get set up here. Okay, welcome to Tax Treatment for Volatility Products, Options, Futures, ETFs, and ETNs. Here's a photo of me. I'm managing member of GreenTraderTax, also Green, Neuschwander, and Manning, LLC, our CPA firm. And trading is a real profession. That's why we're focused on it. Tax professionals don't really serve traders that well. There's a lot of ins and outs, like today's session is a great example. And you deserve the tax advice that you need. You can't just take a 1099-B, go to a local CPA, and use what's on the 1099-B. The rules for brokers are in many cases different than the rules for taxpayers. And you need to put your best foot forward to take advantage of it. For example, today, your 1099-B may say it's an equity, but I'm saying it's a 1256 contract with a 12% lower tax rate. And that benefit is throughout the brackets, maybe not 12%, but a large number, 6, 8, 10%. So there's a lot of money in today's session that you would be leaving on the table if you don't pay attention to this content. So we have the Green's 2017 Trader Tax Guide. This is new content. It's not even in that guide. I wrote the Business of Trading column for Active Trader. I'm a Forbes contributor, and I contribute content to leading brokerage firms. And you'll see us in all the leading media and expos. This is educational information. It's not one-on-one advice. So you should come to us for that, or your own qualified tax advisor or CPA. I'm not an investment advisor. I'm not telling you that volatility is a great product to trade right now. In fact, volatility may be very low, but you know overnight with headline risk it can pop. It's something that traders like to trade. And we have a lot of clients doing very well trading volatility. Now, Robert Green, that's me, and the Green companies are not affiliated with Interactive Brokers. They're a brokerage firm, we're a CPA firm, and a website for education. Today's presentation is based on current tax law. Treasury Secretary Mnuchin was on CNBC promising tax reform by the end of the year. He mentioned it could even be retroactive. I doubt that, but that's why 2017 is a little up in the air. We're covering current tax law. Things could change. Now, why are we here today? What's the big thing about this volatility products with options, futures, ETFs, and ETNs? Normally, tax treatment on financial products is not that confusing. I'm going a little off the PowerPoint for a second. You know, you have an equity, and an option on that equity has the same tax treatment as the equity. They're both securities, and they're reported as equity on your 1099-B. It's the realization method, short-term or long-term capital gain. You pay taxes when you sell. There's no mark-to-market. That's clear. Or it's a futures contract, or options on those futures contracts. Again, the options have the same tax treatment as the underlying. They're both Section 1256 contracts, mark-to-market, and you get the lower 60/40 tax rates. But when you get into volatility products, you're covering the gamut. You have ETFs and ETNs. Well, ETFs, some of them are securities. Others are publicly traded partnerships, which are not securities. ETNs, they're not even securities. There's some odd thing called the prepaid forward contract, executory contract. So you got to figure out that tax treatment first. And then the options on those ETFs and ETNs may depart, may be different. A Chicago CBOE listed option on an ETN, a VIX, We're saying that's 1256, but the ETN itself is not 1256. So you're going to see today that there's a common message here. These products that may be listed on the CBOE, the options, and then some of these other products which may be listed on securities exchanges, NYSE, ORCA, American, BATS, NASDAQ, there's different treatment. They put out, these exchanges may code their products in certain ways that is not really giving tax advice, and then brokers may piggyback that, again, not giving tax advice, and some of the nuances of what we are saying today get lost in the wash. Here's the problem. There is no IRS guidance on point. So if the CBOE has a volatility index, which is some sort of benchmark or gauge index, it's not really an equity or an equity index. How do you fit that into the categories of equity option or non-equity option? Well, the common message today is we're saying it's not an equity option. And it's not a narrow base index. So it is a non-equity option that can go into 1256. That's the commonality here. Now, I hope the CBOE or some of the brokers go to the IRS as we have to try to push them to issue formal guidance. We have gone to the IRS on a pre-counsel hearing for a private letter ruling and talked about it with someone on point. And that's the foundation of today's webinar. So let's delve into it. I just want you to understand why we're here. There's some confusion about what's 1256 and what's not. We want you to grab the gusto on 1256 when you can. Do it in the right way with disclosure to the IRS, maybe a substantial authority position, and go for it and get that savings. So let's back on the PowerPoint. Forgive me for that, Cynthia, because as you know, a lot of this was developing as we prepared this content. On annual tax form 1099-B that you get from the broker, several brokerage firms report various options on volatility products as equity options taxed as securities. I make a case, Robert Green, to treat many of these options as non-equity options in 1256, ushering in lower 60/40 tax rates. So I want you to learn when and how it's possible to accomplish this treatment. That's what we're doing today. We're going to learn the different tax treatment for CBO listed, and that's a key term, CBO listed, futures, that's an easy one, and options on various, the options are the tricky one, on the various CBO VIX indexes. There's lots of different VIX indexes. Also, the CBO listed options on the VIX ETFs or the VIX ETNs, exchange traded notes. Some of you may not even know what those are. We're going to talk about it today. Plus the tax treatment on those underlying VIX ETFs and ETNs. We have a mouthful. We have a lot to cover. There are many different types of volatility products to trade. Tax treatment varies, and some of it is unclear. We're trying to bring the clarity. That's what GreenTraderTax does. Innovation is ahead of regulation. That's the problem. And by the time the IRS catches up with it, there's further innovation. Our clients are trading these products. They need to report it on tax returns. We need to take a stand one way or the other. Why should we take a negative stand when we can take a positive stand? That's what GreenTraderTax does. It brings clarity to where clarity is lacking. There is always a risk the IRS can rule against us and say that, no, we disagree. But we've had a great record all these years. There is an extensive range of volatility products to trade listed on futures and securities exchanges, structured as options, futures, ETFs, and ETNs. Well, if it's on a futures exchange, you tend to think, could it be 1256? If it's on a securities exchange, is it an equity? It's not always the case. The CBOE created several VIX indexes across asset classes, and it lists options and futures to trade on those non-tradable VIX indexes. You're not trading the VIX index. You're trading an option or a future that's listed on the CBOE on the CBOE VIX index. Now, I also addressed the top 12 list of volatility ETFs and ETNs, including ETFs from ProShares and Rex, and ETNs from Barclays, iPath, and Velocity Shares. So I cover the ETN itself, the volatility ETF or ETN, and the CBO listed options on those ETFs and ETNs. So CBOE listed VIX options and futures. They have a lot of VIX indexes across the asset classes listing the options and futures. This is from their website. Volatility products are designed to reflect investors' consensus view of future expected volatility in a given market index or index financial instrument. Volatility products are considered the market's fear gauge. The VIX index is the centerpiece of CBOE Holdings' volatility franchise. This, again, quoted off their website, which includes volatility indexes on broad-based stocks indexes, exchange-traded funds, individual stocks, commodities, several strategy and performance-based indexes, as well as tradable volatility contracts. So they put out these indexes, which these ETFs and ETNs may reference in their own products. But the CBOE has its own options and futures. So go to this link, you'll see they have VIX indexes on U.S. equities, VIX indexes on non-U.S. equities, on commodities, on treasuries, even on some single stock names like Apple. And I realized that those indexes, you don't have to look to the tax treatment of a non-U.S. index, because that's not what you're trading. You're trading this constructed index based on the fear gauge of those markets. That's not an equity index. There's no underlying equity. If, for example, if you own Apple today and you own it next week, the volatility on that can really change. Maybe that's not a good example, but that's one of their VIX indexes. So you're not trading Apple, you're trading a VIX, an index, a strategy index, a benchmark index on that underlying. That's where some of the confusion is. Now let's tackle the first one, the easiest one, the low-hanging fruit, the CBOE listed futures on VIX indexes. The Chicago Futures Exchange, CFE, as part of CBOE, traded VIX futures. Well, they're regulated futures contracts, RFCs. And the CBOE, the CFE, is a qualified border exchange, a QBE. So that fits right into Section 1256. And I doubt any brokers are going to miss the boat on that low-hanging fruit, because that's a clear future. Now, keep in mind, Section 1256 carves out single stock futures, where they really call them securities, not futures. But the VIX future is not a single stock future, even the one on Apple, because it's not on Apple. It's on a fear index that relates to Apple. Let's go to the next one. The CBOE listed options on the VIX indexes. So when you look at all the options of the CBOE, when it comes to VIX, they got a lot of their own options on their own VIX indexes, but then they also have the options on other people's ETFs, volatility ETFs and volatility ETNs, which may reference their indexes. So let's go through the list. First, again, the guidance is unclear on options on VIX indexes, so these general rules should apply. CBO listed options on non-tradable VIX indexes are likely Section 1256 contracts, and I'll go through more of that why. CBOE listed options on VIX indexes are not equity options. The VIX index is not an equity, and the option on it is not an equity option. It doesn't reference a single equity price. It doesn't reference a narrow base index of equity prices. It references a fear gauge. They are likely non-equity options included in Section 1256, which references a barometer VIX index which does not contain equity prices. Now, I expect most brokers, many brokers get this one right. They treat it as an index in their own books, and they pump it out as 1256. A few don't. I don't want to name names today, but most get it right. IB does it right on this. CBOE listed options on ETFs and ETNs. This now gets a little more slippery slope. more brokers are not treating this as 1256. CBOE listed options on VIX securities, ETFs, structured as registered investment companies, RICs, are likely equity options because the security ETF RIC acts like a single equity. So the brokers, they get this right because in general, most brokers are treating the options on the volatility ETFs and ETNs as ETF stock, as an equity. And they are right for the RIC, the RECs from RECs. But most of these ETFs are not RIC. They are commodity ETFs structured as publicly traded partnerships, PTP, or master limited partnerships. They may use the word trust they're not grantor trusts like the precious metals ETFs there. They may use the word trust, but when you dig into the prospectus, they say they're going to be taxed as a publicly traded partnership, PTP. That's not RIC. And they are likely non-equity options for 1256 because a commodity ETF PTP is not a single equity or narrow-based equity index. So you see right there in the ETF, you got the split between the RIC and the PTP. And therefore, the options on those are different. Now, the CBOE listed options on the VIX ETNs, like the VXX, are likely non-equity options because an ETN is not a single equity or a narrow-based equity index. An ETN is a prepaid executory contract. So go back to the beginning. Remember how we're breaking this down. This RIC and this PTP, those two ETFs, they themselves may be treated like a security when you sell them. And the option on the RIC is like a security, but the option on the PTP can be 1256, and most of them are PTP. So that's the first break from the 1099-B, where there's money for you to make by paying attention to our content and diligently moving forward on how to deploy it. And you know, if you're trading the options on the VIX, that's good news that it's 1256 to many. Remember, it's mark to market when you use 1256. It's not the realization method that you can, pay taxes until you sell it. So the ETN itself is not 1256, but the option on it can be. You see, this is breaking away from some generalities that taxpayers have in their mind, and it's further confused by what the CBO puts out and what the brokers report. Now, brokers are not wrong. Some of this stuff is unclear. They're doing the best they can, and it's not wrong. You're not going to get a corrected 1099-B. So keep paying attention on how I'm telling you to handle this if you want to cash in on the benefits. So this all hangs on this so-called definition of a narrow-based index. The values, because remember, if the option is based on a narrow-based index, then it's an equity option. And, the 1099-Bs are correct on that. But our whole point is that these volatility indexes and products are not narrow-based indexes. The values of a narrow-based index must reference actual equity prices. None of these products reference actual equity prices. They're referencing a fear index that the CBOE has constructed. CBOE listed options on VIX indexes do not reference equity prices, so they do not meet the definition of a narrow-based index. Even the CBOE VIX index on an individual equity, VX APL, Apple, does not reference the equity price of APL, Apple, but rather the VIX barometer index for Apple. Therefore, it's likely that even that VX APL is also 1256. If you carry the logic through. Remember, once you take a point in the tax code, a position, you have to be consistent and carry it through. And there's other examples of that later in today's presentation. Now, why am I making such a big deal about wanting to go with 1256? What's that all about? Well, most of you know, but for those who don't, there are tax advantages of Section 1256 contracts. Section 1256 contracts have lower 60/40 capital gains tax rates. 60% is the long-term capital gain. They also have summary reporting and a one-page simple 1099-B. So let me explain the 60/40. It's 60/40 capital gains tax rates, meaning 60%, including the day trades or swing trades. You don't have to hold it 12 months for a long-term capital gain. You get the long-term capital gains rate benefit, which is almost half the rate. The other 40% is taxed at the short-term rate, the ordinary rate. At the maximum tax brackets for 2016 and currently for 2017, the top Section 1256 contract tax rate is 28%. That's 12% lower than the top ordinary rate of 39.6%. So if you make that extra $100,000 and you're in the top bracket, you're going to save another $12,000. Go to this link when you get the notes later on that IB sends out. They'll send out this PowerPoint deck. Click on this link to come to our website. I have a nice table showing the 60/40 rates throughout the brackets. Remember, in the lowest two brackets, the long-term rate is 0. So there's a huge savings throughout the brackets. Now, Section 1256 contracts include U.S. futures, regulated futures contracts, and options on those futures. Bingo! That includes the CFE-listed futures on the VIX indexes, the low-hanging fruit. Next, here's some of the confusion. Broad-based indexes and options on broad-based indexes. Remember, the VIX indexes are non-tradable, so we're not even talking about this category. Anyway, they're not broad-based indexes, but we're not talking about trading indexes. We're talking about options on VIX indexes, which are non-tradable, and options on ETFs and ETNs, which are not broad-based indexes. ETFs are not broad-based indexes. This is the category that we're trying to squeeze into, the non-equity options. Now, some people, this is like going into the VIP section of a club, and the bouncer will bounce you out as fast as you can tell if you don't have a ticket to get in. And if you don't have a clear ticket, you got to talk your way into it, and that's what we're doing today. And that's what we did when we spoke to the IRS about this. There are other people out there that say they have 1256 where we've disagreed because they don't trade an actual option. That's beyond the scope of today. But these are clearly CBOE listed options, and they're on the VIX index or the VIX ETFs or the VIX PTP or on the VIX ETNs, and everything other than the option on the RIC ETF. All these other options on the VIX indexes, the commodity ETFs that are PTP and the VIX ETNs, those are non-equity options that get into the VIP section. Now let's talk about the exchange-traded funds. If you have an exchange-traded fund of, let's say, the NASDAQ 100, that's based on a broad-based number of stocks, but it's a security. It's not a broad-based index compared to the NASDAQ 100 index, the E-mini. So you have to understand that first. So these issuers organize volatility ETFs that are registered investment companies, RIC, or publicly traded partnerships. Tax treatment varies. Some of this we touched on before, but these sections are separated just to reinforce the points. So you got your securities ETFs, securities volatility ETFs. They're registered investment companies, RIC. Selling a securities ETF is deemed a sale of a security. Calling for short-term and long-term capital gains tax treatment using the realization method. That's what the 1099-Bs do, and I'm sure all the brokers get that right. Now, RIC ETFs often make short-term and long-term capital gains distributions, so they actually pay you out some money, so you don't have to adjust your cost basis because they're paying that money out to you. So here are some securities ETF symbols from REX. You got the VMAX, the REX Vol Max Long VIX Weekly Futures Strategy ETF. You just go to Yahoo Finance, you bring up the symbol, and if you see it says ETF, that tells you a lot versus saying ETN. But when it says ETF, you're not sure if it's RIC or publicly traded partnership, but if you look at the prospectus, it will tell you that it's RIC or publicly traded partnership. And of course, you can reference our content. So REX has the VMAX and the VMIN. And brokers report the securities ETF proceeds and cost basis for each transaction on a 1099-B like equities. That's straightforward. You're not departing there. Now let's talk about the commodities futures ETFs. They use the publicly traded partnership PTP structure, also known as the master limited partnership. PTPs issue, and this is where it gets different and confusing, PTPs issue annual Schedule K-1s passing through income or loss, which could include Section 1256 income or loss from trading within the PTP. Well, you have to take that K-1 income and report it on your tax return because the IRS is going to match it. And just because it's a commodities ETF or a futures ETF doesn't mean you're selling a futures. It's not 1256 when you sell the underlying ETF. Selling a commodity ETF is deemed a sale of a security, calling for short-term and long-term capital gains treatment using the realization method. Same as the RIC. You're selling an ETF, which is like the sale of a security. But you need to adjust your cost basis. Taxpayers invested in commodities futures ETFs should adjust cost basis on Form 8949, capital gains and losses, another income or loss, for ensuring they don't double count Schedule K-1 pass-through income. So you're getting this K-1, and they're saying you got to pick up $5,000 of underlying income that we made in this company that you're invested in. But we're not paying that money out to you. You got to pay taxes on it. Well, if that's the case, you don't get paid a distribution. You want to add it to your cost basis so that when you sell it, you don't double count that income. Form 1099-B does not make this cost basis adjustment, so investors need to make a manual adjustment. Remember, with the RIC, with the capital gains distribution, they gave you the cash, so you didn't have to adjust the basis. In this case, you have to adjust it because they didn't give you the cash. So let's talk about some popular volatility ETFs organized at PTPs. These are the big ones. This whole list of 4 from ProShares. I'm working off the top 12 list of ETFs and ETNs. 4 ETFs right here. The other 8 are ETNs. So you got all the ProShares VIX products, the short-term, the mid-term, the Ultra VIX. So you'll see them here. Don't get confused that they're based on an index because they're not 1256 contracts. Remember that. Just because they might be based on an index doesn't mean that they're taxed that way. These are all listed on the NYSE ARCA. Now that we talked about the underlying treatment for the ETF itself, RIC versus PTP, what about the options on those ETFs that are listed on the CBOE? The IRS hasn't explicitly stated tax treatment on sales of options based on ETFs, even non-volatility ETFs. We suggest the following, and I've always had this in our guide. If it's an option on a securities ETF or RIC, they are likely taxed as securities, since a RIC is like an equity or a security. If it's a QBE-listed option, Qualified Board of Exchange like CBOE, on a commodities futures ETF publicly traded partnership, it's likely the 1256 contract, since they are non-equity options. The PTP is not a single equity symbol or narrow-based equity index. Now let's get into the whole world of ETNs, where a lot of people are confused. for good reason. This is not known by most taxpayers, this world, because they never trade an ETN, an exchange-traded note. So the ETN tax treatment is similar to ETFs, exchange-traded funds. These are not funds, these are notes, and they're actually not even notes. Yet there are fundamental differences. An exchange-traded note calculates its rate of return, or interest rate, and it's not interest, based on the movement of an underlying financial instrument, which can be a pretty broad spectrum, or a futures index, or an equities index, or a volatility index. That goes on the underlying financial instrument. I kind of say it's similar to an annuity. You're not buying a security or a future or an index. You're not buying an asset. You're buying kind of an income stream that's based on. It's kind of a simulated product in a sense. And in IRS jargon, and the IRS has had guidance on this, that in their jargon, it's a prepaid executory contract. What the heck is that? Or a prepaid forward contract based on the relevant financial instrument or index. You know, banks, they can concoct all sorts of products with financial engineering, derivatives. An ETN is not a security. Some of the old original ones were debt instruments, but not anymore really. And they're not a security. That's the key thing. And this is what's unclear to some people. So once you say it's not a security, it should not qualify for Section 475, ordinary gain or loss. For our traders with trader tax status who elected 475 on securities only, not futures too, it's not a security. So it's not in the ordinary gain or loss bucket. It's back onto Form 8949 with the realization method, because it's sort of like tax like an ETF, but it's an ETN. And if it's not a security for 475, it's also not a security for Section 1091 wash sale loss rules. Now, your broker is going to treat it like an equity in most cases, and they're going to subject it to the wash sale loss rules. And we think that it should not be subject to the wash sale loss rules. The ETN holder does not own an underlying instrument or a futures index. Don't get confused with what the underlying is. Remember, it's an index. It's a fear gauge based on the movement of something. It's a derivative. It's not the actual underlying product that it's talking about. So if you don't own an underlying futures index, you're not using Section 1256 treatment. Now, report ETN income when realized. So when you sell it, just like when you sell an ETF, you sell an ETN, that's when it's taxable. Look at your holding period, short-term versus long-term. That the broker will do, and you do get that onto Form 8949, capital gains, but you can skip the wash sales. There is an exception. This is where some of the confusion came about. The IRS had a revenue ruling on a case that involved currency, and they made it real clear that they want you to report a currency ETN. If the ETN, Volatility ETN, is based on currency index, they want you to use Section 988, ordinary gain or loss. Now, how do we know all this? Look at the VXX prospectus on tax treatment, and it says right there, investors agree to treat all IPATH ETN except certain currency ETNs as prepaid executory contracts with respect to the relevant index. If such IPATH ETNs are so treated, you recognize gain or loss upon the sale, redemption, and maturity equal to the difference, the amount they receive at such time versus the basis. So I don't think they should use the term securities. I think they didn't mean to use it in that context. Investors generally agree to treat such gain or loss as capital gain or loss, except the currency. Now, this is where some of the confusion came about with VXX, and we actually were part of that. We recognized that confusion. We were wondering if there was something to do here, if you look at our blog history, and we came to a conclusion that there's nothing to do here, because we're always kicking the tires on something to see, is there something we can do? And sometimes there is, sometimes there isn't. In this case, there isn't. The VIX ETN prospectus, in it, the tax attorney suggested reasons why the IRS might, not why you might, but why the IRS might apply 1256 as possible alternative tax treatment. So a lot of people read that and thought, hey, can I use 1256 on the VXX? But when we parsed the words, we saw they're not telling investors to do it. They're just saying the IRS might do it if it's in the IRS's interest, like using mark-to-market. Our firm's tax attorneys, the same ones who worked on the other issues that I talked about today, given a green light, they gave a red light here, a stop sign. In our view, there is no substantial authority for the position that 1256 applies to VXX. We think there is substantial authority for options on VXX to use 1256, but not on VXX. I don't want to delve into all that today. Read the rationale for that position in my blog post, Tax Treatment for Exchange Traded Notes, which was an update on a prior post. It had to do with the confusion of that RevProc, or the revenue ruling on the currency ETN, but we felt that that case was all about currency. It wasn't about a bigger statement. And when it comes to being about currency, it's 988. The IRS wants 988, ordinary gain or loss. So here are your volatility ETN products. So go to this link from ETFDB, and they have the top 12, and it's updated daily. These are the top ETNs. I went through the top ETFs for ProShares already. So you got the iPath ones, the VXX, the VXZ, the LSVX, the BSWN, the EVIX, the XVZ, the VIIX. These are all listed on securities exchanges, either NYSE, American Orca, NASDAQ, or BATS. So your options on the ETNs, the tax treatment is uncertain. Remember, I said it before, even on the options on the ETFs were uncertain. The CBOE is listing these options on the VXX. An IRS official told our tax attorney, Roger D. Lawrence, any option listed on CBOE or other qualified board or exchange, a QBE, whose reference is not a single symbol or a narrow-based index, is a non-equity option in Section 1256. So we wanted to parse the words here, so we dug into the definition of single symbol or narrow-based index, and the equity option definition has two different prongs. That it's a single symbol equity or a narrow-based index equity referencing equity prices. And there's concrete tax law in this going way back that had to reference actual equity prices. Using this rationale, the IRS official told us the option on the VXX ETN is a non-equity option in Section 1256, not even to bother to try to file a private letter ruling because it would be a comfort letter, and the IRS wouldn't even give that it was clear. So what are you going to do about it now? What is your tax preparer going to do about it? Well, most local tax preparers, they swallow the 1099-B hook, line, and sinker. We had this with the wash sale issues. They don't want to go up against the 1099-B. They don't want to do any extra work. If something goes wrong, if the client overpaid a lot, the client's upset with them, they'll just say, hey, it was on the 1099-B. That's cutting corners. When you're in the know, you have to do better for your client. Otherwise, it could be malpractice in some of these cases. So the IRS rules for brokers are different from rules for taxpayers. Brokers take positions that are conservative, and that's fair, but taxpayers should take positions based on substantial authority, and sometimes they want more than that, more likely than not, but you need at least substantial authority. So I'm not saying that every one of these cases are clear to depart. They're not. But there is a green light to move forward to consider it, and you may want to discuss it with us. So your broker may treat some volatility options as equity options when it may be more likely they are non-equity options with lower 60/40 tax rates than 1256. By the way, remember, 60/40 also means mark to market. You may prefer to defer because you didn't sell something at year end. So it's not, remember what I said, this is educational for the masses, well, not the masses, but for traders. You need individualized tax advice for your own situation. Now, when tax treatment is uncertain or IRS guidance is lacking, and that's the case here, brokers tend to use conservative tax treatment on 1099-B reporting, which is fair. Don't go to IB and ask for a corrected 1099-B on this saying, I saw today's webinar. They're not going to do it. They shouldn't do it. There's no position for them to do it. Now, that's the case with the CBOE listed volatility options on volatility ETF PTPs and ETNs. And with some brokers, it's even with the VIX indexes. So we noticed several brokers correctly treat the CBOE listed options on the VIX indexes as 1256, including IB. But we saw a few brokers treat them as equity options. And you can override that, depart from it. Several brokers treat, well, that's what we're implying today, but we need to talk about it. Several brokers treat CBOE listed options on volatility ETF publicly traded partnerships and ETNs like the VIX. They treat them as equity options, whereas we think they're non-equity options. What are you going to do about it? Well, I doubt brokers will correct the 1099-Bs for this uncertain tax treatment, so consider departing from the 1099-B on your tax return and explain it in tax return footnotes and perhaps a Form 8275, a disclosure statement, not the 8275-R, because the R is for when you're taking a position contrary to regulations, and that's sort of like a audit me letter form. This is not the case here with the 8275. It's not contrary to regulation. You're just giving them a heads up about it. The audit rates are not high on this. In fact, we saw some tax experts saying they're very low. So this is the 8275, not the 8275R. When a tax preparer departs from tax treatment on a broker-issued 1099-B, they should consider filing Form 8275 disclosure statement. The IRS states on its website in regards to that form, taxpayers and tax return preparers use this Form 8275 to disclose items or positions that are not otherwise adequately disclosed on a tax return to avoid certain penalties. Now, we do make footnote disclosure, but I think in this case, it's nice to also include the 8275. If you're departing from the 1099-B, it's going to draw more IRS attention. So you got to be a good whistle-clean taxpayer in all other regards and lay this out for the IRS, and you might hear from the IRS on it. Now, is that enough? Maybe not. Our tax attorneys, Roger Lawrence, Mark Feldman, we've established a substantial authority position to use the tax treatment mentioned in this presentation. Substantial authority means it's 33% likely to be correct. That's pretty low. And that means it's okay for a tax preparer to sign a tax return, and the taxpayer will rely on the SA opinion for protection against the accuracy-related penalties, the negligence of 20% and the substantial understatement if it's off by a large amount of up to 20%. So it could be up to 40%. I had that in prior blog posts. So we're just trying to get a substantial authority position. So you should understand what that all means. If you have $1 million gain that you want to use 1256 for rather than securities and get 12% savings on that, save $120,000, you probably want the substantial authority opinion letter, and you should discuss it with our tax attorneys who will offer that letter independent of our CPA firm. That won't go through our firm. That will go directly to the tax attorney. So email us if you're interested in any of this, in departing, and what happened on your 1099-B. You don't even know. What are you entitled to? What the savings could be? Email us and read my blog post about it that just came out, How to Apply Lower Tax Rates to Volatility Options, which is similar to this content today, more condensed. So we're going to look at some closing remarks and questions. So thank you for attending, but stay with us. We're covering questions. Go over to the GreenTraderTax.com website. Give us a call at 888-558-5257 or 203-456-1537. Our team is very focused now on the entity deadline for 2016 tax returns due Friday, September 15th. So are the Q3 estimated tax vouchers. And we're busy with 2016 individual taxes due October 15th. So plan to consult with me or our tax attorneys. The rest of our team is very, very busy now. It's the busiest time of year for us. So come over to the website and let me look at some questions now. I'll bring up our website and I'll bring up the questions. And we're doing pretty good on the time. So let's see some questions on the board. So get your questions in. TD Ameritrade is treating 2016 options on SVXY as regulated futures contracts. Well, that's good because I think the SVXY was on our list as the Commodities ETF PTP. So let's take a look at that. So we go over. Well, we can go over to the blog post, actually. It had a lot of this stuff condensed. And so you just reference the blog post. You see that the commodity ETFs are right here, and the SVXY was right here on that list of the volatility PTP. So the options on it, we would say, is 1256, and it looks like TD Ameritrade has that right, but other brokers may not. That we absolutely know about as well. I trade SPX and NDX. So if you're trading a broad-based index, I think the SPX, the NDX, I think those are your E-minis, your broad-based indexes. What I always do is whenever someone mentions a symbol, I just go right to the Yahoo Finance, scroll down to Yahoo Finance, and I see right off the bat, it says summary S&P, it says SPX, and it says, it usually shows you that it's on the futures exchange, but that's I believe, the E-minis. Let's go to the next question. So this is from JS. Does it mean that there is no 31-day window of holding period on the VXX? So we're saying that the VXX is an ETN. It's not a security. It's not 475, but it's also not war sale, so you don't have to worry about the war sale rule, and you can get right back into it. That's another one of our positions that we're taking now. But again, the broker is going to pick up the war sales if they treat the option on the VXX as an equity, which is what I believe that they do. Most of them do. So this affects not only your 016 returns, but your 017 planning. So JT, TDA also treats options on VXX as regulated futures contracts. Well, that's our position too, and most brokers do not, but that's our position, that it can be because the VXX, the ETN, is a non-equity, so the option on it is a non-equity option. Susan, what I saw was great. So sorry I got stuck in LA traffic, missed the first half. Yeah, watch the recording, Susan. IB does a great job putting out the recordings on YouTube too. CW, Robert, for the top bracket, folks, isn't 12% savings on 60 term gains, so the net is 12. No, it's do the 60-40 math. 60 times 20, 40 times 39.6, the blended rate is 28%, 12% less than the 39.6. Go over to our website, you'll see how all the math works. BH, I didn't see XIV on your list. Let's see XIV. Let's go over to this list here on the blog post. So let's just go here and go to, let me minimize something. Hold on. So just on this post, go to find X. You said you didn't see XIV. Okay, so XIV, and it's on the list of the volatility ETNs. There it is. So that's the ETN treatment, which is not 1256. It's the prepaid forward contract. AW, have you asked IB to change? Well, IB is not going to change any 1099Bs, nor should they. I mean, why if just because we found substantial authority with 33% likelihood of success, why should they change their 1099Bs? They have a rationale. So this is a good lesson. Different brokers approach these things differently. We had this issue with the wash sales. That's why you got to know what you're doing, what you're trading, how your broker is reporting it, how you want to report it. Your accountant needs to be in the know about it. If a lot of local accountants, this is all going to be way over their head. You can't expect them to know these. It's like going to an internist and expecting them to be a cardiologist. Accounting has moved to these specialty areas, and we've jumped on that. This is our niche. Does 1256 cause AMT? Well, if all you have is 1256 and your blended rate in your bracket is really low, you might trigger some AMT. That's like a very rich person just having long-term capital gains triggering some AMT. XIV has no options. That may be the case. I don't know exactly which ones have the options and which ones don't. Go to that list on the CBO website. So you go over to this list here on CBOE on the volatility indexes and scroll down, read about it, and then look at the ones. These are the ones that they have the options on. They have the U.S. equity, the non-U.S. equity, fixed income, the FX, commodities. You can see the whole list. So does anyone else have questions for today? Yeah, so just, you got to look at the actual list. So it should be in my content. You'll see it online. You can always go to the prospectus. I kind of showed you today how to figure it all out. Now, trade log, as Jason brings up, trade log is not necessarily handling everything in according to our new content on ETNs. I'm going to be talking to trade log this week. But trade log, I have to check my notes on how it's handling some of this stuff. But it may not go for the 60-40 where we say it can go for it. It may be similar to what it does on the, I have actually an email from our Christy Cam about it. It is treating the options on the VIX indexes as 1256. But I don't want to quote what trade log's doing today without checking my notes on that. So ask me by email on that one. I'd have to bring up my email notes, and I'm sharing a screen. I don't want to show everything. So what's the next question here? XIV is Credit Suisse product. Okay. So now, when you heard today's presentation, and there's a lot of CPAs, tax attorneys on the calls, traders, major volatility traders, if any of you have some comments, whether they're positive or negative or criticism, or you agree, you disagree, whatever it is, please bring it on. Feed it into us. We want to see what you have to say and take it into consideration. So just to sum up, we have some positions that we think can make you some money that there's substantial authority for, in our opinion, that we've discussed with the IRS, that may depart from some 1099Bs, may depart from some trade software, where we have to actually, and that's why it's important to have us run the trade log, because we're running some trade log files for some big clients who are huge in volatility right now with major implications for 2016 tax returns. That helped precipitate this deep dive into this content because we have to finish those returns. And we are adjusting trade log for like the wash sales on the ETNs, on the VIX for 1256, on the options on VIX. So trade log is not doing it that way, and we're adjusting it for that. So that's just one example. So yes, you can get a retail license to trade log and run it on your own. You can even go to another provider that may offer the service that is not a CPA firm. Why not use our service from a CPA firm where we deploy our latest thinking on all these positions? It's not just the software, it's the service that uses the software. So if you have questions, do a consult with me. Just come over to professional services. We have a few minutes here. So scroll down, but let me reduce the questions here. So under professional services, you can see consulting under there, and then just sign up for a consultation, and that will be with me. You can get on my schedule right away. You can also have a consultation with one of our tax attorneys, but the opinion letter would come from the attorney directly. So you can see here there's the tax consultation with the tax attorney. We have our accounting service where we actually run the software and make all these adjustments to get it right for you. So check that out. And then, of course, tax compliance is our major core business where we prepare your tax returns and plan them. So I think I got to all the questions. I'm going to get ready to go back to you, Cynthia. But everyone come to the website. There's the Contact Us page. There's live chat. You should connect with me on Twitter because the latest, whatever it is, I send out a tweet. Connect with me on LinkedIn as well. But send us your, send the questions right now if we didn't get to them. I will answer questions today. I'm going to jump in the car and head down to the city after this, but I'll answer questions this afternoon. I'm going to see a Pink Floyd concert tonight. I'm excited about that in the city, Barclays Center. So I'm really sorry for you in the hurricane zone, everyone. You'll be able to watch this recording later. We have a lot of traders in Texas and Florida, and our heartfelt wishes go out to you that you'll be safe and rebuild and get back in business soon. Thank you to IB for hosting and doing the recording. Back to you, Cynthia.
Well, Robert, I want to thank you very much as well. I know you put a lot of work and effort into today's presentation, and we really do appreciate it. Now, as a reminder to everyone in attendance, we have been recording today's event, and each of you will get a direct recording link soon after our session ends. I'll also be including a link to the webinar notes, which shows all of and makes all of the links that Robert provided in this presentation clickable as well. So do want you to be aware there's, if you do want to come back and review these concepts, simply watch your email. It's your inbox. We should be sending this out in about the next hour or so. So if you do want to come back whenever to take a look at this information, just check your inbox. It will also be posted on the Interactive Broker website. Underneath the education menu, there's a webinars link where you can find not only this presentation, but Robert has provided us quite a bit of tax information over the last year. So do search by presenter, and you can find a list of all of his tax webinars presented up to date. So with that, we are going to be concluding our session here today. You can all exit using the X in the upper right-hand corner, and thank you for attending. We know the time that you spend is valuable, and we do appreciate you spending some time with us. Have a great day, everyone, and special thanks to Robert Green for today's presentation. Thanks, everyone. Have a great afternoon, and do remember all to please trade smart. Thanks, everybody.